Hello, hello, and welcome to this video where I'm going to be talking to you about how to survive and thrive during the downturn, which we think is coming up based on a lot of the data that we're seeing. And it's important that we start translating that to understand what it means for startups. I know that often it feels like we're in our own microcosmic world here. We're a million miles away from public markets and what's going on there. But whatever happens in the real economy is going to start to impact us, whether it's in terms of investor appetite or whether it's in terms of customer demand or the supply and demand for talent, jobs, etc. And so today I want to just revisit a concept from Charles Darwin here about success for any given species here, for any given startup, really being based upon our ability to survive, not being that of being the strongest, but being the most adaptive. And here we don't have Darwin's time horizons to look at here over tens of thousands, millions, billions of years. We've got a relatively short period within which we need to adapt if we are going to survive. And obviously, this doesn't apply to all of us, but for a lot of startups, we are going to be burning through the cash runway that we thought we had. We are going to be in a more pessimistic, a slightly more arduous fundraising environment than we probably expected we would be when we raised this capital 12, 18 months, 6 months ago. And so now we need to adapt to meet that challenge. So, as Darwin famously said, it's all about the ability to adapt, not the strength of any given species or creature which leads to its success. And it's the same here for startups. And in fact, we saw this a lot through the pandemic. You look at the companies that were able to adapt. You looked at the startups that are able to reposition their products. Amazing success stories being people like Zoom, for example, who quickly were able to hire more people, were able to take advantage of this absolute boom in home and hybrid working and adapt it accordingly. Same can be said about a number of biotech and medical startups, for example. They were able to digitalize processes. And certainly here in the UK, a lot of commentators note that the pandemic actually helped the NHS, the National Health Service here, to accelerate digital transformation by potentially 5 or 10 years. And obviously that's anecdotal, but that talks about how in any given market, whether we're in an upswing or a downswing, your ability to adapt is key to your survival. Now, one of the reasons for that is because we want to make sure here that we avoid the so-called death spiral. Now, all credit here to Sequoia, who originally produced this graph here. And what they talk about when they talk about this death spiral is that if we're going to adapt, we need to be quick about it because we cannot wait until we're running out of capital until we do that. We're not going to have as many options. We're not going to have the time to see how those things play out. And so to avoid the death spiral here, what we have to do is we have to be decisive and make those changes quickly. Now, we're not just talking about cutting costs. This has to be a wholesale change in strategy. When we think about slowing demand, we think about more expensive capital, we think about some of the other ructions that be going on in terms of the labor market and suppliers, etc. We need to think about how do we adapt our strategy. And by being decisive early, it means that whilst we may take the hit earlier, we can then ride through that wave. We can ride through whatever happens over the next 12 to 24 months with a much leaner cost base. We can have a focus here on delivering KPIs that show steady, gradual, incremental traction rather than taking these big startup moonshot attempts, promising the world to investors, hoping that the next fundraise they still believe us. In this type of environment, that sort of belief is going to be in short supply. They're going to want to see traction. And so making the cuts today, making the changes in strategy today so that we can deliver that traction over that next 12 to 24-month period will mean we're in a really good place. Now, a lot of companies have actually seen the reverse of this coming out of the pandemic. They had so much support from governments, etc., that actually we were just propping up so-called zombie companies. Whereas the companies that took the recession on the chin, the pandemic on the chin, made changes to their strategy, were actually able to come out the other side much stronger, much more focused, much leaner. So a way to think about this is, what decision do we plan to make versus what decisions will we wish we had made in the future? I.e., what are the tough decisions we can make now versus what are the decisions in the future we're going to regret not making because in the future we're going to be short of cash and short of time. This is the classic discipline versus regret. And really, the answer to this question is not necessarily taking drastic action right now. But as we sit here in June, as I'm recording this, it's about having a plan and doing that exercise of, if we needed to radically and drastically change our strategy here, what would we do? So, what are the decisions that we're going to plan to make? Okay, and how is that going to save us pain in the future, even though it might be painful today? And one of the reasons we need to do that is because it's easiest to conserve cash when we've got loads of it. When it's in short supply, right, when there's hardly any of it, when we're running out of options, we're not going to have any levers to pull here. We're going to have less trust, less leverage over investors. We're going to have fewer other sources of capital to find. So not only is this about surviving through this process, but also if we can make those tough decisions early and we can come out of this, whatever this future looks like on this green line here, it's about thriving. So I'm going to leave that with you. Discipline versus regret. I hope this has been helpful, and I look forward to Sorry, let's put that screenshot off. I look forward to helping many more of you along the way. If any of you have got any questions, please don't hesitate to get in touch with me. LinkedIn, YouTube, email, etc. Just get in touch to talk about how we can help you make those decisions, what sort of decisions you need to be making, and what investors are going to be looking for. I'll be hosting a webinar in the coming weeks, so please, please, please sign up to that. It'll be filled full of insights, tips, techniques, strategies, etc. So I look forward to seeing you there.